Hey there, traders and investors. Welcome to Spy Trader, your go-to podcast for all things S&P 500 and beyond. I'm your host, Cashflow Carl, here to navigate you through the latest financial currents. Today is August 23rd, 2024, and it's noon, so grab your lunch and tune in. First, a big thank you to our listeners. Keep sending that feedback. We love hearing from our Spy Trader family. Let's dive into today's news. 1. Interest rate cuts to begin. Jerome Powell, the Fed chair, signaled that we could see interest rate cuts as early as mid-September. Lower interest rates usually mean businesses can borrow at cheaper rates, boosting investment and consumer spending. This marks a pivot from their inflation-fighting stance towards ensuring job market stability since unemployment has crept up from 3.4% to 4.3% in the last year. 2. Political tension. The timing of this change is interesting, coming just weeks before the presidential election. Powell's decision could receive political scrutiny, but history shows mixed outcomes for such moves during an election year. 3. Market impact. Lower interest rates tend to be music to the stock market's ears, especially for sectors like tech and consumer discretionary, which thrive on growth. Today's market movers and shakers. Nvidia, 3.8%, Tesla, 4.2%. These tech giants are riding high, anticipating the benefits lower borrowing costs can bring. Cava Group, 23%. Strong earnings have sent this restaurant chain soaring. Intuit, 7.3%. Despite beating earnings, their gloomy future outlook and job cuts have sent investors running for the hills. Trading recommendations. 1. Tech stocks. With interest rates likely to drop, tech stocks like Nvidia, Apple, and Tesla show significant promise. They're well-positioned to take advantage of cheaper money for expansion and innovation. 2. Consumer discretionary. Lower interest payments mean extra cash for consumers. Consider stocks like Amazon and Nike, which have strong consumer bases. 3. Utilities and real estate. These sectors typically do well in a low interest rate environment. Companies like Duke Energy or Prologis may benefit from lower financing costs and stable income streams. 4. Financials. Be cautious here. While rate cuts can sometimes boost overall economic activity, they can also tighten margins for banks. Sectors like financials, e.g. JP Morgan, Goldman Sachs, might face some headwinds. Reasoning. Lower interest rates make borrowing cheaper and generally lead to higher valuations by compressing discount rates in stock valuations. This is particularly true for growth stocks in the tech sector, which rely on future earnings. Utilities and real estate benefit from lower borrowing costs, improving their bottom lines. However, reduced rates could squeeze bank margins since they often rely on the interest rate spread for profits. As the election looms, political developments could inject volatility into the market. Hedging strategies might be wise, especially for those heavily weighted in sectors sensitive to political fluctuations. Before I sign off, here's a quick joke. How do you describe a financially savvy ghost as a supernatural investor? Thanks for tuning in. Keep your eyes on those economic indicators and stay strategic out there. Until next time, this is Cashflow Carl signing off from Spy Trader. Happy trading.